Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, February 20th. Hope you guys have a great morning so far today. We do got a couple items here on the economic calendar. We'll start off what we get every Thursday, and that is the weekly jobless claims. So last week, the report came in at 206,000 people applying for unemployment. Forecasts were supposed to show an uptick of up to 210,000, and it came in right at expectation at 210,000. So even though there's a slight uptick, these are still very strong job numbers. And today's report actually comes in a little bit higher weighted wise because this week's it will be used as part of the sample week for the Bureau of Labor Statistics jobs numbers that will be released on March 6th. So will be a little bit more important because again that's going to be part of their calculations as to how they determine what the job numbers will be released coming in March for the month of February. So still good, very good numbers, very strong numbers. It's low and still shows the strength of the jobs market. And speaking of strength, look at this Philly Fed number, Philly Fed index for the month of, sorry, I put down Fed, it's February, excuse me. We had a pretty strong number the previous one in December at 17, and anything above is considered optimism or expansion. And it was supposed to dip a little bit down to 10, and instead it over doubled to 36.7 in February. Um, this is manufacturing in the Philadelphia region, and we had a decent number come in for New York, and we'll have to see what Chicago comes in. But Philadelphia, wow, that's a 2-year high. We haven't seen that number since about May of 2018. So a very good number there, came in pretty hot. Also, leading economic indicators also after dropping in the month of January by 0.3%, it jumped up 0.8% in February. So good overall numbers here, economic data. So let's take a look here at the headline news. And stock market is down. Why would that be when you look at great data like that? Well, again, more news on the coronavirus. I think investors are starting to realize that they may have underestimated the impact of what the coronavirus has. It's more than 75,000 in China have been contacted with it, and more than 2,100 people have died from it. We had our first death here in South Korea on there, so this could be something that we may hear more of more people dying from this coronavirus in other countries. So this is kind of concerning, obviously, investors a little bit, and figuring that maybe stock market might be overpricing. So we did kind of go negative and then positive, and now we're back into negative territory. Dow is down over 100 points right now as I'm doing this, and again, just a lot of concern what this is bringing about from the coronavirus. We also have a merger announced between Morgan Stanley and E-Trade that kind of helped the markets earlier, but again, this coronavirus I think is on the minds of a lot of the investors right now. So let's see how this is playing out with the bond market, see what's going on with mortgage rates. We are currently up about 8 basis points. So we only closed up 2 basis points yesterday, so it's now not quite there for price improvement. We're getting pretty close for price improvement, but we're up about 8 basis points, but not quite enough there. I would say maybe later today or tomorrow. It depends if this continues going up, but we need a little bit more movement to get a price improvement here. But again, we're on the right start, up 8 basis points so far this morning, which is obviously very good news for mortgage. And here we're down quite a bit. As you can see, we start even higher than where we were yesterday on the yields, and now we're down to about 1.52. Now, some of the news again, you haven't heard for a while. We were inverted yield curve for last week, but then the Fed, what they did was they came in and started buying short-term rates to boost that up, prop that up against it. So we were out of the inverted. Now we're kind of inching our way back into an inverted yield curve again. So you might start hearing that coming down the line here about possible recession, which a lot of this might be looked at due to the coronavirus that's affecting the global impact. That is having much more global impact economic-wise for a lot of people, as well as obviously health reasons. So that's pretty much a wrap. Rates remain unchanged as of yet, but we are pushing that we're potentially could see some better rates coming up here very, very quickly. We'll keep our eyes on that. All right, so that's the wrap. If you guys are in California, I'd love to hear from you guys. Buying or refinance, please reach out. Best way to contact me is either direct message me or email me. Email, you'll get the quickest response. We've done a lot of provide a lot of different solutions for people who've had a hard time getting pre-approved or refinancing. We've had also helping people out with uh, providing solutions as to getting into retirement plans, to also helping them with college planning, different things. If you've gone through a divorce, we've helped them set up things in that manner as well. So a lot of different things we've helped the people out. And if you guys want to discuss, reach out, and I'll love to be able to talk about your situation and how we can help you guys. Again, email is the best way to reach me. It's quickest response, but I do respond to both the DM and email, which are in the red on this screen. You guys have a great rest of your day. Thanks so much for watching. We'll catch you in tomorrow's video. Bye bye.